Mr. Speaker, I will address much of the substance of the bill in the general debate. I do want to say we are here dealing with an issue, subprime mortgages, that is the single biggest contributor to the greatest financial crisis the world has seen since the Asian crisis of the late 90s. We are in a very difficult situation now in the financial markets, and wholly unregulated subprime mortgages, unregulated by the originator and then unregulated in the secondary market, has given rise to this. The previous speaker talked about danger we could do with our liability for the securitizers. I would note that one of those who volunteered to our committee that we should do something, he wasn't specific about what, but something to put some liability there, was the chairman of the Federal Reserve, Mr. Bernanke, who has talked about what he called the originate to distribute model, i.e. people who give mortgages who are not themselves subject to regulation, who then in turn sell it to a secondary market, and what's been lost in that is the responsibility to worry about repayment. Now, we will talk more about this. There's a delicate balance here. I am not in favor, and this bill does not in general preempt the rights of states to do what they think is necessary in the consumer protection area. But in the matter I just talked about, when we are talking about a national secondary market, we did believe some preemption is necessary. We have tried to define it precisely and hold it to a minimum necessary to have a functioning market. As I said, I will address some of those more. The bill, I believe, does strike a balance that can be a difficult one to achieve, particularly in that area of some preemption so that you have a functioning secondary market, but not to the point where you intrude on the rights of the states to make these decisions. I do want to address the rule. At my request, this rule does make in order a number of amendments from both parties. Several of the amendments offered by Republicans will be, I hope, accepted. The manager's amendment itself is a genuinely bipartisan amendment. Much of the manager's amendment, in fact, came from the minority, and indeed in our committee, the ranking member had a major input into this. This bill did pass committee by a vote of 45 to 19, which was the Democrats, not all, but not a majority, but a significant number of Republicans. We have, I believe, a rule that allows most of the issues that are at stake to be voted on. There are amendments that would strike major parts of the bill. The gentleman from North Carolina has one. The gentleman from Georgia has one. There is a third, a gentleman from New Jersey. Three amendments that would strike very much at the heart of the bill. I believe they should be debated, and I would hope defeated, but they are in this amendment. I did consult very much with the ranking member, and I believe we have a procedure today that doesn't cover everything, but gives us a chance to vote on the major issues.
The gentleman is recognized for additional minute.
I appreciate that. We have a procedure today that I believe will have the major issues before us. At the end of today, I hope we will have passed a bill, and it will be a bill which I must say will probably leave all parties in interest a little bit unhappy. I'm not pleased with that, but I think given the competing interests here, that is the best that we can do, particularly on this issue of whether or not we preempt. I would note that while some of the groups that I work with in the consumer area are disappointed because they wanted no preemption at all, passage of this bill is supported by the Conference of State Bank Supervisors. They think there are some things they would like to see changed further on. It's supported by the NAACP and La Raza, and it has, we believe, the essential elements. The core is this. Loans made by banks as originators, subject to bank regulation, have not been the problem. The problem has come when loans were originated by unregulated people. Not that they were morally deficient, but there was no regulation. We take the regulations. 15 seconds over there, gentlemen.
I yield the gentleman additional 30 seconds.
Gentleman is recognized 30 seconds.
Here's the core of this bill. We have tried, talking to the bank regulators and others, to take the principles that the bank regulators have applied to loans originated by regulated depository institutions and apply them to the unregulated originators, the brokers. And it is not the case that the brokers were morally deficient. In all of these professions, we have an overwhelming majority of honest people. But the problem is, in the absence of any regulation and the availability of a secondary market with no rules, that minority that was not scrupulous caused us problems. This bill fixes that.